All right. Hi, Patrick. Are you there?
I'm here. We can hear you. How's it going?
Excellent. Oh, it's great.
Never a dull moment, huh? So we're
No.
just we're just getting your slides going here, and then once we get that up and running, we'll let you take it away. So everyone who's joining us from the phone today, so you don't get to see him, this is Tim Riley. He's the policy director for sales and excise tax at the Department of Revenue. So again, we appreciate your patience with us, and we're gonna kind of go through it. So Tim won't be able to see the screen, so we're just gonna kind of work together in tandem to get this done. But Tim, while I pull up these slides, I just want to give a quick introduction to yourself and to
Sure.
a little bit of what you're gonna be talking about today.
Yeah, happy to do that. I apologize to everybody again for the technical difficulties. I've done dozens of presentations over the last year and a half remotely, and this is the first time this has ever happened. So I am Tim Riley. I'm the Sales and Excise Tax Policy Director for the Department of Revenue. And I've been in that role for about 2 years since those positions were created. Prior to that, I was a staff attorney working on legislative stuff and sales tax as well. And so I've given this presentation, I think, once before 2 years ago, but the law has changed pretty significantly in the last 4 or so years. So hopefully everybody is ready to learn how the law works today going forward following those pretty significant changes.
All right, so everyone should be able to see our first slide here. Tim, we've got the title slide. Again, if you have questions, as they come in, I will do my best to relay all of those to Tim. If you can see the links in the chat, you can get the slides there as well. I'll post them again to kind of follow along. And
all right.
Thanks again. So,
well, let's dive in. Of course, our first slide here, second slide, I suppose, is a disclaimer for everyone, warning that nobody should rely on anything I'm saying as legal advice from the department. In the event I get something wrong, if you have a question, if you want a specific binding answer, the only way to do that is through a petition for declaratory order. So moving on to the next slide, we'll get into the actual meat of the presentation here. And so I won't spend too much time on this because hopefully this is old news to some people. But there was a fairly significant Iowa Supreme Court, excuse me, United States Supreme Court decision changing the landscape of this area of sales tax law in 2018. It was a challenge brought by Wayfair, the online retailer, to a law that the state of South Dakota had enacted essentially for the purpose of challenging the prior precedent, the decision from Quill versus North Dakota, where the United States Supreme Court had said that states can only expect businesses to collect and remit sales tax in their state if that business has physical presence in the state. So with the way the internet has changed the world in the last couple of decades, South Dakota felt it was time to have the Supreme Court perhaps revisit that precedent and drafted a law, as you can see in the third bullet there with those sub bullets, designed to require most out-of-state retailers selling products and services into the state of South Dakota to have to collect and remit sales tax. And that's generally what people refer to as economic presence or economic presence nexus. After that decision came out, you can follow that link below. Our Department of Revenue wrote some guidance about our interpretation of that decision and the impact that had on some legislation that had passed a couple of weeks prior to that. And so I think it's probably worth stating out loud here. So something to keep in mind as we go along, the factors that South Dakota used to require out-of-state sellers to collect sales tax in South Dakota is that sellers need to be collecting $100,000 or more of revenue from sales into the state, or making 200 separate transactions into the state. They also noted that the law would not be retroactive, assuming it would go into effect after a positive outcome from the U.S. Supreme Court. And the Supreme Court also noted, as part of its decision of what made this a reasonable law for out-of-state businesses to comply with in South Dakota, was the fact that South Dakota is a member of the Streamlined Sales and Use Tax Governing Board, which Iowa is, and we'll come back to Streamlined in a little while as well. So we can go to the next slide. And so this is just a map from an organization called the Multi-State Tax Commission. I just wanted to point out that since the Wayfair case was decided a little over 3 years ago, and even a couple other states, including Iowa, had passed laws just prior to that. But now every state in the country that has a sales tax requires out-of-state retailers to collect and remit in their state. And so you can see this map does a good job, I think, of illustrating the variety of laws that states have pursued, have enacted. Iowa is there in the purple. You can see what our thresholds are, and we'll discuss those again here in just a second, a little more specifically for Iowa. The bigger states, California, Texas, New York, have higher sales economic thresholds. A couple states have gone in between. And so the last two states, if you're curious to get on board with this trend across the country, were Missouri and Florida. And they, so you can note there that Missouri's law won't go into effect until January 1 of 2023. So if you're making sales into Missouri, you may still not have to collect and remit on those. We can go to the next slide, Patrick. So as I mentioned, in anticipation of the outcome that South Dakota did receive from the Supreme Court in the Wayfair case, the Iowa legislature chose to act in advance of that and implement its own remote seller provisions, requiring remote sellers making sales into Iowa to collect and remit. And so that law was enacted in May of 2018, and again, that decision came out in June of 2018. And so when the law was initially passed, it allowed for several months of a delay. It was not going to take effect until January 1 of 19. And it did mirror, it copied the same thresholds, the $100,000 of revenue and 200 separate transactions that South Dakota used. The legislature did come back the following legislative session, 2019, and remove the 200 separate transaction threshold. And that was, as you maybe saw on the slide with the map a couple slides ago, more states had been trending that way, and states that were later to adopt these types of provisions had been dropping the transaction threshold, because that even though the U.S. Supreme Court said that was a reasonable approach in South Dakota, there are still lots of sellers who may sell 200 50-cent items into a particular state, such as Iowa, and that would not necessarily be a good reflection of that a business having a significant enough impact economically in the state of Iowa or other states, such that they should have to collect and remit. So Iowa dropped that threshold in effective July 1 of 2019. We can jump to the next slide. A little bit more about what a remote seller is. So this is this first bullet here is from the guidance that we published after that legislation passed in 2018, which is linked right there, that first link. So a remote seller is the term that's typically used in our guidance, and you'll see that pretty much anywhere else, any other publications or other states. So a remote seller is someone who makes sales of something that's taxable, so it's tangible personal property, a taxable service, or a specified digital product. It makes sales of those things into Iowa but has no physical presence. And it can be done through a variety of means, obviously. Most businesses these days make sales through the internet, but obviously over the phone sales and catalog sales are still an option, and those things would also qualify someone as a remote seller. So if you haven't seen our guidance on that, that gives a little bit more explanation about who a remote seller is. Feel free to check out that link if you access the slides that Patrick has. All those links should be active, and so you can head to that guidance. If you want additional detail on legal requirements above and beyond what, or in addition to supplement the statutory provisions, you can take a look at that second link of our administrative rules, and that applies pretty much throughout this whole presentation. That chapter 215 of our rules covers marketplace sales and remote sellers as well. But I figured I'd put that in here at this point. So the next slide is just a quick note on local option sales tax. I just wanted to point out that as I'm talking about, the obligation to collect and remit sales tax, especially for purposes of this presentation, I'm also referring to any applicable local option sales tax. So you may know that Iowa's sales tax rate, the state sales tax rate is 6%, and if a local jurisdiction has imposed local option sales tax, then your business needs to collect an additional 1%, totaling 7%. And so there are no exceptions for remote sellers or marketplace sales when it comes to local option sales tax or loss not applying. So anytime as I'm running through this presentation here, talking about who needs to collect sales tax and what needs to be collected, it will always include any loss that has been imposed by that local jurisdiction. So a little bit more, the next slide, on the collection threshold. And so there's quite a bit here in this one sentence, this first bullet to take in. So the remote seller has to collect if they have $100,000 or more in gross revenue from Iowa sales in the current year or the prior calendar year. And so a couple things to note. It's the cutoff is $100,000 or more, so it includes that $100,000 number. Gross revenue means revenue from all sales into Iowa, from all Iowa sales, not just taxable sales or anything else. It has to be, some states will draw the distinction at retail sales or just taxable sales, in which, at least in our view, I think that would make it a little bit more complicated for a retailer if they had to exclude certain sales because they, were sales for resale or wholesale or otherwise not taxable. For Iowa's purposes and for several other states, though not all, we look at our statute requires that that retailers calculate gross revenue from all Iowa sales. And then another note here that just wanted to reiterate, as I mentioned earlier, when we were defining what a remote seller was, that a seller that has any physical presence, this is not relevant to those retailers. Retailers with physical presence are going to need to collect and remit on all their Iowa sales, regardless of how much of it is made online. If they have a presence here and they're making sales, doesn't matter how their sales are made, all those sales are going to be they're going to be responsible for collecting and remitting for all those sales, with the exception, of course, for marketplace sales, which we'll come back to in just a minute. The next slide gets into another detail from the threshold of when someone has an obligation to collect and remit. And so you will note from the language on that prior slide that the seller has to register and collect and remit if they have generated $100,000 in gross revenue from sales in the current or the prior calendar year. And so that means if somebody meets the threshold in 2021 for the first time, they need to register and collect starting as the second small bullet there points out. They have to register and collect in 2021, and they need to collect through at least the end of 2022. So if you're looking at it from the other perspective, once you're in 2022, that retailer would say, did I exceed that threshold in 2022 or 2021? And if so, then I need to collect through the end of 2022. And so if a remote seller exceeds the threshold in 2021, they're going to need to collect through at least the end of 22, and then their gross revenue in 22 is going to determine obviously whether they have an obligation going forward after that. The second small bullet here, this is something that the statute did not articulate, but we felt it was necessary to provide administrative rule establishing when a remote seller is obligated to start collecting. And so we felt it was reasonable at the department to make that requirement the first day of the next calendar month, that it's at least 30 days from the day the seller exceeded the threshold. And so it's kind of a bit of a word salad, but on the next slide here, we've got an example for you. So if a remote seller did not exceed the threshold last year in 2020, but they exceeded on September 15th for the first time, that means they are going to need to start collecting and remitting on November 1 of 2021 of this year. So that's the first day of the next calendar month that's at least 30 days after the date they exceeded the threshold, right? So if they exceed the threshold on September 15th, 30 days after that is middle of October, and then so they go to the first day of the month that's at least 30 days past when they exceeded the threshold. So they do not need to collect on sales made in October or September. They should probably get ready to start collecting. They should register in that time. But for Iowa's purposes, they don't need to start collecting and remitting until November 1. And so if they exceed that threshold on September 15th or any time in 2021 for that matter, they have to collect through at least the end of 2022, as I mentioned a few minutes ago. And I would note here that for businesses that are making sales into other states, there is, from my what I've gathered from reading laws from other states, there is some difference in what states expect, when states expect retailers to start collecting and remitting. Some states expect it to be on the very next sale after the retailer crosses the threshold. So it might be the same day. Some states make it the next, the first day of the month that's at least 60 days after they exceed. So it's even more of a lag than what Iowa provides. So there's a bit of a wide variety of what states do. So if you're making sales into other states, you'll want to make sure that you're up on what those states require, and I'll help you. I'll show you some resources at the end of this that can help you figure that out.
So Tim, we've got a couple questions regarding sales that are tax exempt and how those can work towards or meet the threshold. So if they're doing sales that are tax exempt and they exceed that 100,000, is that where they need to register and then just remit no tax, or how does that work?
Yep. So that's a good question. I've got a slide on that in a little bit. If a retailer is making only exempt sales, then they won't need to collect. Is that actually? Oh no, it's not the next slide. I think it might be the one after, or in a couple at least. But so if a retailer is only making exempt sales, say they only make wholesale sales, or they only make sales for resale, or they only sell stuff to entities that have a specific exemption just for them, then technically that retailer will exceed the threshold. But we've also put into our administrative rules that if a retailer is only making non-taxable sales, they do not need to collect and remit. They do not need to register then. And so that's in our chapter of rules as well, in chapter 215. I forget the exact rule that's in, but that's in there. And so that rule, or that principle is true for any retailer. If a retailer, even with physical presence, is only in Iowa, is only making non-taxable sales, then they don't need a permit and they don't need to collect and remit. If a retailer is making 50-50, if they half their sales are taxable and half are not, they need to include all of those non-taxable sales in their calculation to determine if they exceed the threshold or not. So that's what gross revenue means. You need to take into account all of the sales that retailer makes, not just taxable sales. So I would suggest, it seems to make sense to me, that the best approach would be to calculate all sales and then determine if you're making any taxable sales. If the retailer knows that they make no taxable sales in Iowa, then they can make that decision right away. But if there's a question as to whether they meet the threshold, then they just need to make sure that they count both.
Okay. Thanks, Tim.
Yeah. All right, let's go to the next slide with the heading of marketplace sales. And so this is another something else to keep in mind for remote sellers or any business in Iowa that's making sales through marketplaces. If the business is only making sales through a marketplace, that remote seller, that business, may not need to have their own permit and collect and remit in Iowa. And the reason I say may in that first sentence there is they do not need to collect if the marketplace facilitator is registered and collecting and remitting. So the remote seller should check with their marketplace facilitators, the entity that operates the marketplace, to double check and see if they are collecting or not. If they're not collecting, if the marketplace facilitator is not registered, is not collecting and remitting, then that seller is going to be responsible for their sales still. All right, and so this next slide gets into a little bit more nuance. So here, I thought it was worth pointing out that I know there's a lot of text on this slide, but I apologize. I couldn't think of a better way to break it up. But so for remote sellers that make sales that are so if they use a marketplace, but they also make sales on their own, either through their own website or through their own physical location, that remote seller needs to make sure that they take into account all of their sales. So all the sales that they make through the marketplace, plus the sales that they make on their website or from a physical location, all of that gets totaled together to figure out if they meet or exceed the $100,000 threshold. And so that, the $100,000 threshold is really, it's a measure of the remote seller's business activity, their impact on the economy in the state of Iowa is a way to think about it. And so what the statute is trying to gauge is how much business that remote seller is doing in the state of Iowa, regardless of how they do it. So that's what, that hopefully that sort of thought process might help people remember how and why, the statute came about the way it did, that, all the sales, regardless of source, marketplace, website, physical location, need to be added together. And the same holds true for taxable and non-taxable sales. That same theory behind that is true for that question as well. Also, so remote sellers that make marketplace sales and non-marketplace sales. So if you're selling on Amazon, but you're also selling on your own website, hopefully Amazon is collecting and remitting on your sales. I'd still probably recommend that you double check. But for assuming that seller exceeds the threshold, that seller is going to need a permit to collect and remit on their own non-marketplace sales. So if a seller uses Amazon even if they use Amazon for 95% of their business, and then they maintain their own website where they make sales, and they exceed the $100,000 threshold, they're going to need to have a permit to collect and remit on that 5% of their total sales if that's what's made through their own personal website. And then a last note there, as I emphasized earlier, for retailers with physical presence, if they have physical presence, they're going to need to collect and remit on any of their non-marketplace sales, regardless of whether they meet the $100,000 threshold. So the next slide is a question that we get once in a while, and I'd also point out that various states handle this differently, but our law does not have any sort of inactive permit status or have any sort of automatic cancellation of the obligation to register and collect and remit. So if a remote seller does not exceed the threshold, does not meet or exceed the threshold in a year, once they get through that calendar year and the next calendar year, and they also don't meet or exceed the threshold in that year, then they can cancel their registration. So in the example that I gave earlier, where someone first exceeds the threshold in September of this year, they need to collect through at least 2022. If they don't exceed the threshold in 2022, at the end of 22, they could choose to cancel their registration, to stop collecting and remitting. It does not happen automatically. If they choose to not cancel their permit, even if they're under the threshold, as long as any retailer has an active sales tax permit, they are obligated to collect and remit sales tax. So if the business chooses to not, even if they fall below the threshold and they choose to not cancel their permit, they need to continue to collect and remit. There's certainly no provision of the law that requires anyone to collect or to cancel their permit if they drop below the threshold. It may make sense, may just be simpler to continue to collect and remit for that business, especially if they hover around the threshold. It'd be easier probably to just continue to collect and remit rather than go back and forth between having a permit and not having a permit in Iowa. Some states do allow for an inactive permit status, but so that may be an option if your business makes sales into other states and you fall below the threshold in that state. That might be something you want to check in on, but Iowa's statute does not provide for that. So this next slide is just a quick overview of who needs to have a sales tax permit. I know I've thrown a lot at you in these last 20 minutes, but so I thought it would be good to just summarize these businesses need to have a sales tax permit in Iowa. If they have physical presence, period, it doesn't matter how much revenue they generate from sales into Iowa. If it's a remote seller that makes $100,000 or more in gross revenue from Iowa sales, or a marketplace facilitator that makes sales of its own or facilitates total $100,000 worth of sales into Iowa. So those are the three main groups of businesses that need to have a sales tax permit here in Iowa. We'll talk a little bit more about marketplace facilitators in a minute. Here's the slide that the next one is the slide that the question earlier got to. So if sellers have no taxable sales, they do not need to get a permit, collect and remit. But if they do begin to make taxable sales into Iowa, they'll need a permit, start filing returns. So just something to keep in mind. If the business knows that they don't make taxable sales for whatever reason under Iowa law, then they don't need a permit. And this next slide is just a brief reminder of retailers' use tax. And so this is a tax type that is largely, it seems to be fading, especially after Wayfair. Businesses that sold products into Iowa, obviously prior to Wayfair and prior to Senate File 2417, did not have an obligation to collect and remit sales tax, but they, if they wanted to, had the opportunity to register with us for a retailer's use tax permit and collect the 6% use tax. No loss is applicable to use tax, but those out-of-state retailers could collect the 6% and remit that to us. In the instance where a remote seller, as we've been talking about, has a retailer's use tax permit, and they exceed the threshold, that business should cancel their retailer's use permit and instead register for a sales tax permit. The department does not have the authority to switch somebody's permit type at this time, but to report more accurately, I guess is the best thing to say for that business. They should if they exceed the threshold, they should be collecting and remitting sales tax, including the 7% when applicable, the seventh penny for lost when applicable, rather than retailer's use tax. All right, we have another map here for you. I'll let you take a look at that for a second, and I'll talk for just a few minutes about marketplace facilitators. So you can see here through this map, there's obviously more uniformity across the country about who requires marketplace facilitators to collect and remit. And again, Missouri and Florida were last to jump on this train this past calendar year. And Missouri's law does not take effect for some time still. But now pretty much every state that has a sales tax requires marketplace facilitators to collect and remit. Obviously, Oklahoma and Alabama have their own unique circumstances, but for the most part, marketplace facilitators need to register and collect and remit on sales into any state with a sales tax. Those gray states are the well, actually it's not on the map itself, but those grayed out states are the ones that do not have sales tax. So next slide gets into just defining who a marketplace facilitator is. Probably I won't spend a ton of time on this because it probably impacts less of the folks here, though it may. If someone operates a consignment store or an auction or an online marketplace of their own, where they make things available for sale that are not theirs, and collect a fee, they get paid somehow, then that business may be a marketplace facilitator. But there's essentially two prongs to the test here in Iowa about what qualifies someone as a marketplace facilitator. If they're providing infrastructure or support for sales to occur, and if they are collecting the sales price or fee or some other compensation related to the retail sale. And so it has to be both. It's not just one or the other. The business has to be doing both of those things. And so marketplace facilitators have the same thresholds as remote sellers, though, as I mentioned a minute ago on that prior slide, the $100,000 in gross revenue is from sales either made by the facilitator of products that they own and produced and are making available for sale, or products and services that are being made on behalf of a third party, of a remote seller or a marketplace seller, if you will. And again, we've got more guidance on who may be a marketplace facilitator up on our website at that link, if you care to check that out. And so this next slide is a little bit more explanation of what qualifies a business as providing infrastructure or support, the first prong of this test. And so I won't read through each of those. That's a lot of text again, but that's a simplified version of what's in the statute. Essentially, if someone's listing, the most common ones will be listing a product on its own marketplace, providing the infrastructure, physical building, or website for someone to make something available for purchase, communicating offer and acceptance between a buyer and a seller, setting prices is also something to keep in mind. If somebody makes something available for sale and requires that it be sold for a certain price, that's something that might trigger marketplace facilitator responsibilities. The next slide talks a little bit as well about the second prong of what makes somebody a marketplace facilitator, whether they're collecting a price or some other compensation. And so obviously the most obvious one is collecting the payment directly. The use of providing payment processing services also satisfies this prong of the test. The third one is fairly broad. I would say this third small bullet here. If a business is making something available for sale and then they collect a listing fee from the seller of that product, the marketplace seller, third-party seller, if you will, or some other type of fee related to the sale, or even if something is never even sold, then that they will satisfy that element of the test under Iowa law as well. So that's just a brief overview of who qualifies as a marketplace facilitator. If someone is a marketplace facilitator, then they have the same obligations to have a permit, collect and remit on sales that they facilitate as a remote seller, as a business who doesn't have a physical presence here. So I don't need to get into too much more detail about how the law works for them. But essentially the Iowa sales tax statute deems a remote seller and a marketplace facilitator as retailers with obligations to collect and remit. And so they are all treated similarly. So with our last few minutes here, we can go to the next slide. So here's another map for you. Excuse me. So Iowa is one of 23 member states of the Streamlined Sales Tax Governing Board. You can see obviously the blue states shaded in there are the member states. Gray states do not participate. Well, they are not members. Sometimes they call into meetings, but the blue states, typically in the Midwest, couple from the coast. We got Rhode Island and New Jersey, North Carolina, Washington, participating as well as members. And so these states have all enacted statutes to adopt the Streamlined Sales and Use Tax Agreement. And so on the next slide, you can see what the so this is borrowed from Streamline's website, what their goals are, the purpose of Streamlined, why it exists. It's been around for almost 20 years. Iowa passed a law to join Streamlined in 2003, and the effective date of that was, I believe, January 1st of 2005. And so these are all the attempted benefits of states joining Streamlined. The member states of Streamlined want it to be easier for businesses to collect and remit tax in their state. And so member states agree to use a common set of definitions for certain terms. It doesn't mean something has to be taxable in every state that's a Streamlined member or non-taxable, but if the state treats that item with special, if the state gives an item special treatment, it has to use that definition. So a good example is diapers. Diapers specify digital products, candy. There's all sorts of terms that are specifically defined by Streamlined, included in the Streamlined agreement. And if a state chooses to exempt diapers, which some states do, they have to define diapers. They have to they have to answer the question of what a diaper is the same way as every other Streamlined state, for the most part. States get very little leeway in differing from the definitions, but for the most part, it has to be the same as every other member state. And so Iowa does not, for example, Iowa does not exempt diapers. Diapers are a taxable, tangible personal property, so it's not in our statute. But we do exempt prepared food. No, excuse me, we exempt food, but not prepared food. We do not exempt candy. So all of those terms are Streamlined defined terms. And since we do treat them differently than typical tangible personal property, we have to use those terms. So the next slide is simply just a set of links that you might find useful. It's perhaps a bit more detailed than what you might want to read, but if you're very curious about what's required of member states, you can take a look at the agreement itself, the rules that implement the agreement, and then the third one is there's a contract that Streamlined has with these types of businesses that I'll talk more about in a second. Businesses called certified service providers, and so Streamlined and this group of businesses have agreed to work on behalf of remote sellers in all the member states to make tax to make sales tax simpler to ease the burden of compliance for those businesses. So the next slide gives a bit of an overview about what a certified service provider is. It's one of the key elements of Streamlined was kind of the genesis of these types of businesses working on behalf of sellers to do essentially all of the businesses sales and use tax functions, including registering in states where they make sales, filing returns in those states, remitting tax to those states. And so the certified service providers, the CSPs, through this contract that I mentioned a second ago, they provide these services to sellers who register through Streamlined for free in those Streamlined states. They also, as far as I know, they also provide those services in non-Streamlined states, though I don't believe it's free. and the states, the Streamlined member states will, they help support the compensation of the CSPs by, especially prior to Wayfair. The theory was if Streamlined and the CSPs could work together to get all of these sellers without physical presence in each of the Streamlined member states to collect and remit tax that on products that are being sold to be used in those states, then it was certainly worth compensating those CSPs. So if you're interested in perhaps pursuing that, there's more information about CSPs in that link below at the bottom of this slide. There's only a handful of them, but all the information about each of them is on the Streamlined website. The next slide highlights some of the other what I would think of as major features for small businesses, for remote sellers of using Streamlined. And so whether a business uses a CSP or not, they can register through Streamlined in any or all of the member states in one place for free. And so if a business is making sales into, if someone's in, well, I guess it could be anywhere, especially with online sales, but if someone's selling into the Dakotas and Minnesota and Wisconsin and Nebraska and Kansas, as well as Iowa, and they're not, if somebody's not yet registered in some of those states, they can register through Streamlined and for free, and register all in one place, and then file returns either independently with the state, or file the single. They can use one return remitted to each member state has to accept the Streamlined return. So registration and filing of returns is simpler, even if a business chooses not to use a CSP. Some of the other resources that I think are most useful, and I was gonna, we're running short on time. I was gonna click through some of these things to show you on Streamlined's website, but I would strongly encourage you to take a look at these links and the links on the next page, on the next slide. Streamlined has put a lot of time, and the member states, I have to say, have put a lot of time into putting together information to help remote sellers, marketplace facilitators figure out what their obligations are in each state. So Streamlined, I think, is perhaps, I would say it's probably the best resource I've come across, apart from engaging with another business who might have the answers to other states. But Streamlined has even compiled information in these links and elsewhere on their website about non-member states, so that anybody who is looking for information about what their obligations are can go to the Streamlined's page, find good information about each member state, and then most other states have also provided Streamlined answers to some pretty basic questions about what their economic thresholds are, how long people have to register, whether they need to calculate gross sales or taxable sales, things of that nature. So you can find all that information on Streamlined's website. And then the next slide is one of my favorite activities every year, revising our certificate of compliance and our taxability matrix documents. And so these are very long spreadsheets, essentially, that give information for sellers. CSPs use them, but providing information to sellers so that they know what is taxable, how a state treats certain things, whether a state allows certain exemptions, other types of administrative procedures in each state. And so those links that I provided there are direct to Iowa's forms. But if you, and I was going to show you this too, but you can find it as well under the you go to the Streamlined website, there's a tab for businesses at the top, and then you can find a line for a certificate of compliance and a line for a taxability matrix, and it's got each state's, I think there's one more link you have to click, and then you can get to each other state's documents. And so if you're making sales into other states, these are excellent resources for you to use to figure out what exactly you should be collecting and remitting on, or other practices that you should be following in those states. And special plug this year for the second taxability matrix document on tax administration practices. They added an extremely long provision, a whole set of questions related to remote sellers, marketplace facilitators. It was the result of a lot of hard work from member states participating, work groups, and members of the business community participating as well, trying to get questions to answers for small businesses, perhaps like yourselves or your clients. So I would definitely point you to that third document. If you're not finding what you're looking for if you need more detail than what's in the links on the prior slide for remote sellers, marketplace sellers, etc., you can probably find what you're looking for in this last link on the taxability matrix. So that brings me to the conclusion of the presentation. I do just want to point out before we go that all of the guidance documents that I provided links to and the administrative rules, those are all things that you can have sent directly to your email inbox whenever the department publishes something new. You can go to our homepage. The screenshot here is the very bottom of our homepage, tax.iowa.gov. And so if you're not already subscribed, hit that button at the bottom, and it will take you to the next page, the next slide. You just type in your email, and then the next link after you hit submit there will give you lots of different options for types of information that you're looking for. You can break it down by tax type, by if you're interested in information about e-file and pay, specifically our current online system for filing and paying. You can get all sorts of information sent directly to you from the department whenever we publish anything. Next slide is simply just a couple of phone numbers in case you don't have them, and the email address for taxpayer services. If you reach out to taxpayer services and they can't answer your question, they'll likely reach out to me. And so getting in touch with them, they generally do a very good job. And so I would strongly encourage you to reach out to them first. If you also have a question that you would like probably a written response to, though not necessarily a legally binding answer, you can submit a request for tax guidance through that link there. And we do our best to get to each of those. We don't answer every specific question, but they do inform a lot of the work we do on our other guidance documents. Like, for example, we just recently published or revised, added some information to some of our existing guides about construction contractors and the farmer's guide and sales news tax guide, based on the volume of questions that we've been getting about the taxability of portable toilets. So if that's a question that you have had and we haven't responded to you directly, that information, just the volume of questions that we get about that, led us to put that into our guidance. So that's just one example of if you don't get a direct answer, we do look at every question, and we try to incorporate, we try to address frequent issues, recurring issues through other existing guidance. I would also note that we do get quite a few questions that are very fact specific, and so those we also tend to not address because the tax guidance, the purpose of the tax guidance request form is not to give a binding answer for a specific taxpayer. for how to handle each specific situation. But if it's a question that says, is X taxable or is X exempt, that's something that we can say, here's the statute, or here's the rule that covers what you're talking about, and should suffice. So with that, again, I'd like to apologize for the very strange technical difficulties, and I tried to move through this as quickly as possible. I apologize for going over a couple of minutes. If there are more questions that have come through that I can't see, Patrick can read them to me if people still have time. Otherwise, feel free to reach out to us through those links on that slide just before. But I appreciate everybody's time today.
Absolutely. Well, Tim, great job. And again, everyone who's still with us, thanks for bearing with us. I did drop into the chat real quick. September 8th is going to be our next webinar. We're going to be providing an overview on some of the internal processes of the Department of Revenue. You can sign up for that there on that UNI Zoom link. So on behalf of University of Northern Iowa, Iowa SourceLink, Iowa Economic Development Authority, and the Iowa Department of Revenue, thank you for being here with us. Again, interesting day, but we got through it. So we do have a couple questions, Tim, that we're going to try to hopefully sneak in here real quick. So if you do have questions in the chat, we'll try to get to them. If we don't get to your question, if we're not able to get to them, please reach out. I'll put it back on that contact us slide. Please do go ahead and send it in to the Department of Revenue. So real quick, we've got sort of two questions around use tax. So when someone gets an invoice from a seller outside of Iowa and they do not charge them sales tax, do they have to pay use tax on those types of services?
If it's right. So if it's a service, that has to be a taxable service, of course. That's the first place to start. But if it's a taxable service, or if it's tangible personal property or specified digital products, so something that would be subject to sales tax, but if it's coming from out of state and the out of state retailer does not collect and remit sales tax, if they either because they aren't aware of the law or they are under the threshold and don't need to collect and remit, and if they also don't collect and remit use tax, then yes, the purchaser is responsible for filing their own consumer's use tax return. If it's a business who engages in these types of transactions frequently, the department would encourage that business to get a consumer's use permit so that they can file on a regular basis and not forget to do that. But if it's an individual or a business who does this once in a while, that can be done through the other consumer. I forget the exact title of the form, but we have a consumer's use worksheet. I think is what it's called right now, and so that's up on our website, and someone can fill that out and remit the tax that the 6% that they would owe.
All right. Very good. So next question here. So it's about crowdfunding sites like Indiegogo or Kickstarter, basically where people can do sort of pre-sales. It seems like those places would be marketplace facilitators, but they do not collect and remit sales tax. So two parts of the question. One is pre-selling through like a crowdfunding platform. Does the Department of Revenue consider that sales? And if so, subject to that sales tax?
That's a good question. It's something that we have talked about at the department for a while, though it's been some time since we discussed it, so I don't remember exactly where we landed. It's obviously not in our guidance, so I can't say for sure, and I would have to. This is a good question though. I would have to follow up with this person if you want to send me an email or send or through the taxpayer services line there or the tax guidance request. We could dig into that further.
All right. So Carrie, if you heard that, it looks like they can dig into that further and we can get in touch to make sure that's followed up on. So another one here, if you're based in Iowa, but you're selling to other states, no physical presence in the other states, and you're over the 100,000 threshold, but all the sales are tax exempt, do you still need to file Iowa sales tax if you're in Iowa?
If you're not making any taxable sales in Iowa or anywhere else, for Iowa sales, for Iowa purposes, you do not need a permit. And so that's regardless of whether you're making sales in Iowa or out of the state. Obviously, if you're making out of state sales, you know, if you're selling online or however you're making your sales to other states, that's not going to, you know, if you're not making taxable sales in Iowa, you don't need a Iowa sales tax permit.
All right.
I don't know. I don't know how that works for each of the other states. So I would perhaps, I can't remember if the streamlined information. I know on the taxability matrix that I talked about at the end, that question is answered by us on ours, and it should be answered by all the other member states. So if you're selling it to streamlined states, they should have answered that question as well. So you can find that information there.
Awesome. So then a favorite question that we've talked about before. So would a website design or software development company fall under a new taxable service, or would that be exempt because the product is sold to a non-end user?
That's a good question. And that's, I got that question. I looked at it. Somebody else sent that question in yesterday, well, recently. It was recent. And that's another question that I'm going to have conversations about with our legal team about whether that fits into the definition of other digital product in the definition of specified digital products, because there's a list of services related to in the list of taxable services for 2326, almost right at the bottom, services related to you know, installing, maintaining, upgrading, enhancing, etc. Specified digital products. And so I think the question there comes down to whether it's a specified digital product. I don't know that website maintenance is another, you know, it would be like a news or information product. I'm not sure that fits into that definition, but that is a question we've gotten a couple times, and I do plan to address that in some guidance. So I don't have a firm answer for you today, but keep an eye out on we do have a guidance page on specified digital products. You can find it on our tax guidance page, and so I'll try to get that added to that.
Awesome. So last one here, and then we'll wrap up. So is there a case when would an out-of-state entity that's no physical presence in Iowa ever have a use tax permit requirement?
Well, out-of-state businesses that the short answer is we can't require that they have a use tax permit. They can have one if they would like to, because if they don't collect and remit use tax on behalf of their customers are going to have an obligation to remit consumers use tax. So the theory is if the out-of-state retailers who have no obligation to collect and remit sales tax do it for their purchaser, for their customers, it's simpler for the customers and for the department. But yeah, the short answer to that question is no.
Okay. So that'll wrap up our questions today. We're a little bit over time. So if you haven't been able to get a copy of the slides, that link is in the chat. This has been recorded. We'll follow up with the recording when it's available, hopefully later this week or early next week. Again, Tim, thank you very much for sticking with us and putting this on. I think it went really well, and that the information was well received. Be sure to check out iasourcing.com on our tax webinars page for all of our past and our upcoming webinar lineup. We're looking forward to seeing you at some of those. So appreciate the time, everyone. Have a great rest of your Wednesday.
Thank you. Thanks, everybody.